ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 30th day of August, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office or away from your desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during the show each day on our YouTube channel. Easy to remember, youtube.com/CFRN. youtube.com/CFRN. Not only do we stream live each day during the show, but we archive each and every daily broadcast. Currently, we have over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. So with that, we'll open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. God, we pray for the people who are in the path of this storm, in the midst of this storm, for every person that's been affected, for every family, every home, every business. We just pray for your hedge of protection, God, to be around them, to surround them, to protect them. And God, we know that you sent your son Jesus to earth to set us free from the tyranny of sin, death, and Satan. Yet there are also tyrants amongst us who lead nations and rebellions. These tyrants seek to create war and misery amongst the nations. They exalt themselves above all, including you, Jesus. Therefore, we pray that you would shatter their weapons, knock them down off their pedestal, so that wars may not abound, and so that world peace may flourish through your anointing spirit. Give us a lasting hope in a world without war. In Jesus' name we pray. Amen.
Amen.
Amen. Happy Monday. Okay, guys, we'll talk about this later in the show. PayPal is exploring a stock trading platform for its U.S. customers. True story. PayPal getting into the stock trading business. All right, let me give you the numbers from around the world. These are the cash markets, the indices, as they're called. Starting here in the U.S. Let's refresh the data. Here we go. Currently, the Dow's up 48 points. NASDAQ is up 123, which is almost 1%. S&P 500 is up 25, but the Russell 2000, our man in the street, is down 6.5 points. In the commodity basket, crude oil up 24 cents, trading 68.98 last. Gold down $7, trading 18.1250 last. Silver down 13 cents, trading 23.98 last. In the Asian markets, at the close, the Nikkei posted a gain of 148 points. The Shanghai rose 6. The Hang Seng gained 131. And in the European markets at the close, FTSE posted a gain of 23 points. The DAX rose 35. The CAC gained 5. That gives us a green day in Asia. Not a big day, but a green day. A green day in the UK. Not a big day, but a green day. And here at home in the US of A, it is a mixed Radio Monday, with the Russell 2000 the only one in the red. The Dow is positive, not by much. The NASDAQ is positive almost 1%. S&P 500 is up 0.5%. And the Russell 2000 just 6 points in the red. So there you have it. With that, we'll go to Michael, get a recap of what happened this morning in the live trading room. After that, I'll come back and we'll talk about the Logic 247 alerts, the concierge trade alerts, and of course, at any time throughout the show, if you have questions, just type them into the chat box, and Michael or I will be more than happy to answer those questions just for you.
Yes,
Michael,
indeed.
I can see your charts, so it's all yours.
All right, here we go. All right. Good afternoon, everyone. Today is Monday, the 30th day of August, 2021. All right, so if you've not taken a free trial with us, go to the homepage here at cfrn.net. Scroll down to right here where it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you got to make sure you click on that, okay? Okay. Spreadsheet. We had one of those days today, guys. It's not green. It's blue, but it could be worse. A blue day means we did get the goal for the day, but we gave it back. And anybody that stayed a little after in the morning session saw that there was plenty of opportunity to correct that as well. I'll get into all that in just a minute, but if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 30th day of August, 2021. We made 9 ticks in crude, lost 13 in gold, and made 1 on the ES. We actually made more on the ES, we made more on gold, we made more on crude. But for the stuff that we did in the room, that's where we were. All right, today it took 6 minutes and 1 trade to get to the goal for the day. That's the thing you need to focus on. 6 minutes and 1 trade, and we got the goal for the day. On the month now, we're at $7,260 a contract. That's over 20 trading days, averaging $363 per contract per 2-hour trading day. We have now gotten our goal for the day on 165 out of 167 days. And that puts us at $99,452.50. That's lower than it was on Friday, okay? Because that's where we were in the room today. So it's down just a little bit, $27.50 from Friday. That's over 167 trading days, averaging $595 per contract per 2-hour trading day. Now, this number here actually went up because we did get the goal for the day on the very first trade of the day. So we went from 46.23 total hours on the year. Well, we actually had like 46.21, and we went to 46.23 total hours on the year. And if you were to do that with 8 contracts, where we would be right now, you would have been done in 6 minutes this morning with $800 in profit with one trade. So that puts our per hour total on the year to be $1,947. That's the average per hour total you would have on the year. All right, now let's jump into what did and didn't happen. All right, we'll start out with the ES because it had the fewest opportunities, but it still had opportunities. All right, our first one was right here. We ended up taking a break even. Second one was right here. We took another break even, but we were highlighting areas that it was slowly getting up to. Now down here, the area that it was going to slowly crawl up to was the weekly trading zone. So it did that, and then I was highlighting these areas up here for it to get up to, and you see it got up to all those, and then we took 1 tick profit on that. And in here, in the room, with the trades in the room, on this one, we ended up with a break even. I ended up with actually plus 4 ticks. I mean, I showed that to, well, I showed that to everybody in the room this morning. Here, I'll show it to you. See, I ended up with plus 4 ticks on it. But as far as the room goes, I was break even. And then we highlighted these areas up here for it to get to, and it eventually got up there, but it just wasn't giving us any trade opportunity. You see the cycle down here did this really slow cycle reset, and then it just started moving up and down. You can't really trade it when it's like that. And there was this one trade right before the close this morning. It's got everything, the makings of the highest probability trade setup. The only thing I couldn't really convince myself of was a trend. Okay, now I could have said that it was lower lows than back over here. It was definitely lower lows going down, this leg down. But I wanted to see something like this, lower lows like this. But right here, it pulled back up, it tested the BBC, gave a down close. The MA1 was the right color, the cycle was the right color, we had bearish separation. I should have taken that trade, but I let it go. And it's been totally flat ever since. We'll get into gold now. Gold was my nemesis today. I stopped out a couple of times on gold, and it just didn't give a whole lot of opportunity. First trade here on gold was a stop out. I was looking for it to get up to there, and it didn't. Down here, I got a little bit back. Let's see, got just a couple of ticks back. We're minus 6 right there. Had another break even there. Then on this one right here, right after it got the break even, I was saying it's going to drop down to these levels right here, and it just went bam right down to those levels without me. And then I picked up 1 tick here on the follow-up, and that went down to the level that I had said it should get to. And then it started going into all this over here, but we didn't end up having a trade set up because the cycle was going up too steep. But it got down to all the levels, and then I put 1 more level in, but again, we didn't have a trade set up. Then we had this one right here, but that was all we could do. We ended up with a break even on that. It spun around and started to move up, but right here we had lower highs and higher lows, so we didn't have a trend to go with, and that was pretty much it. There was nothing else we could do with gold this morning. So we ended up, after stopping out on this one, putting us at minus 13. That put us negative on the day. And that was pretty much where we ended up. Now I'll get into the crude oil right here. Now crude was hitting pretty much all the levels that we put out today, but we didn't put that many out, sadly. Our very first trade of the day was right here, and we nailed that one, picked up 10 ticks profit on that. This was not an actual trade here because we needed to break dynamic support. Then we broke it over here, so we took the follow-up trade. So we went from plus 10 right there to plus 13 to plus 17, and that's where it ended. We had a break even there, a stop out there. That put us at plus 9. And we had 1 more break even trade way over here, but no trading all through here. Had a break even trade there, a break even trade there, a break even trade here. And that was it. The last one that we did at the end of the session. Now I did this during the break part of the session, was this one right here. And I was actually looking for it to get all the way up here, but my entry point was right here and everybody saw it. That hung around anyway. But that was it. That was crude oil for the day. So it was kind of a difficult trading day. We did have just a little bit of news that came out today. I don't remember what it was. I don't know. It wasn't really terribly important. It was a medium impact news. But anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 30th day of August, 2021. Made 9 ticks In crude, we lost 13 ticks in gold and 1 tick on the ES. We made 1 tick on the ES, put us at minus 27.50 on the morning session. Today it took 6 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and this is actually at 20. So on the month now, we're at $7,260 a contract. That's over 20 trading days, averaging $363 per contract per 2-hour trading day. We have gotten our goal on 165 out of 167 possible days. And over here, that puts us at $99,452 per contract per trading day, per 2-hour trading day. That's over 167 days, averaging $595 per contract per 2-hour trading day. So on the year now, if we would have stopped when we got the goal for the day, we would have worked a total of 46.23 hours and averaged $1,947 per hour. Okay. All right. So if you've not taken a free trial with us, go here to eminitrainingschool.com. All we ask for is your first name, your email, your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Okay. And hit the send button. You'll be sent a confirmation link. And once you click that confirmation link, we will know that you took a free trial. All right. You'll get all kinds of information in the mail. Email, that is. All right. And that's it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am
Excellent.
Ready. Recap of the recap.
Today it took 6 minutes and 1 trade to get to $100 contract.
Good job, as always.
Yep.
And guys, let me just show you this real quick before we get into headlines and all this other stuff. I started a video last night, yesterday afternoon, about, I don't know, 6, 7 o'clock last night. I didn't realize it was going to take so long, and I left it running overnight, and finally the video got so huge and so bloated, and then I think I was recording it on the GoToMeeting platform, and I think it somehow got disconnected. But then I went to render the file this morning, and lo and behold, guess what it said? It's going to take over 3 hours to render this video. So I've got to wait until the show's over and the market's closed this afternoon, and then I'm going to try to render that file, because I would like for you to all be able to see it. Now, I want to edit it down. I don't expect you to sit through 8 hours of video. I want to just, during the dead space, I want to fast forward to the next spot where I start talking. But this is the S&P 500 E-mini futures on a 30-minute chart. And you can barely see it here behind the candles. It says entry 4508. Okay. Now, the first time it triggered was on this candle here, and it ran up to 4509 and a half. That's 1.5 points. But we know that important prices, important areas are almost always tested. So price then got back below the trigger at 4508, and it ran up to 4509.75, which is 1 3/4 points, and then back below the trigger, and it ran up to the initial target at 4510, and then it came back to the trigger yet again. Wonder if I can just stretch that out. Yeah, you can kind of see the entry 4508 there. And so the point of this video was to show how the multiple targets work. And so once we hit the initial target, we had a 1.5 point move, we had a 1 3/4 point move, then we had the 2 point move that we were initially looking for. So what is that? Let's see, 1 1/4, 1.5. So that's 3 1/4 plus 2. So there's 5 1/4 points is what the market made available. Here, And then we made one last pullback here. We didn't quite go below the trigger, but we pulled back to the BBC. And as I pop in about every hour or 2 hours on this video, and I explain what's happening on the screen. And we got lift off here, and we went from basically the trigger at 45.08, again to the initial target at 45.10, then to the second target at 45.13, and then to the final target at 45.20, which is a new current weekly trading zone. There's a zone at 45.20/21. The next weekly trading zone is still overhead this week up at 45.42/43. So I'm going to do my best to render this, edit it into a digestible size so that you'll all be able to watch this as it develops. Now, I drew the lines over here, but when I started recording, it was back over in this area here. Okay. Now, we knew there was the potential for two-sided action. So if price had dropped, we were prepared to be short 44.99, down to 97, down to 95, down to the short CTA, down to last week's weekly trading zone at 82/83. And I typed in some commentary while it was happening. So far, price triggered once at 45.08 and ran to 45.09.5. Then, as I mentioned earlier, price would probably drop back below the trigger, 45.08. It did, and ran to 45.0975. With our methodology, most alerts, once triggered, will most likely trigger multiple times. The market made 1.5 points available and 1 3/4 points available. Together, that's 3 1/4 points. Price is now dropping back below the trigger a third time. Unusual? Not at all. So you guys hear me say it every day that once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So I'm going to do my best to get this video to you. I think I want to get it down to like a 15-20 minute version that covers all the important points and parts, and then I'll make sure it's available to everyone, even those who are on the trial. In fact, it's really important for you guys because you've probably not seen this in action before. Okay? All right. With all that said, let's talk headlines for a minute. Hurricane Ida made landfall yesterday. Michael, did you guys get affected by the storm? Nope, he's already on the phone. Hurricane Ida made landfall Sunday in Louisiana as a powerful Category 4 storm, slamming into the state with top sustained winds of 150 miles per hour after intensifying over the warm waters of the Gulf of Mexico. The storm killed at least one person and knocked out power to 1 million customers, including the entire city of New Orleans, with reports of significant damage to buildings and residents trapped on rooftops. Ida weakened and its forward speed slowed to a crawl as it pushed inland. That's never a good thing when the storm slows down, raising flood potential across multiple states. What I found really interesting was that Ida hit on the 16th anniversary of Hurricane Katrina, which left historic devastation in New Orleans. Most of you in this audience are old enough to remember that. Ida tied a record for the most powerful hurricane to hammer Louisiana, equaling the strength of last year's Hurricane Laura and the last island hurricane of 1856. Our hearts, our prayers, and our thoughts are with all the folks who've been affected by the storm and who are still in danger of the storm. The U.S. military said Sunday it killed suspected suicide bombers in an explosive-laden vehicle with a drone strike in Kabul. There's been some conflicting commentary that says those were actually civilians that were hit. I know that there have been 2 strikes. The second strike, so they say, I guess we'll just have to wait for more information. President Biden met with families of troops killed in Afghanistan to pay his respects yesterday. The U.S. and 97 other countries reach a deal with the Taliban to continue evacuations. Now, America's had a long-standing strategy of, well, we don't negotiate with terrorists. So, has the Taliban become non-terrorists? Are they no longer considered terrorists? Is this the new dawn and a new day? I don't know. We just pray that this thing will come to an end. Hurricane Ida forced temporary shutdown of the pipeline. Colonial Pipeline has temporarily shut down 2 fuel lines in the south as a precaution due to Hurricane Ida. The company said fuel would still be available throughout the southeast, calling the shutdown a precautionary and routine safety measure. The European Union is preparing to recommend a halt to all non-essential travel from the United States to help curb surging coronavirus infections driven by the spread of the highly infectious Delta variant. Fauci, Lord Fauci, Prince Fauci, Dr. Fauci, supports COVID vaccine mandates in school. Yesterday, the good doctor said he backs making COVID-19 vaccines mandatory for all school children, the ones least affected, to help prevent surging coronavirus infections driven by the spread of the highly contagious Delta variant. And this one, well, I'll let you arrive at your own conclusion. North Korea restarts the Yongbyon, it's probably more like Yongbyon nuclear reactor. North Korea appears to have restarted its plutonium-producing nuclear reactor, according to the United Nations Atomic Energy Agency on Sunday. The move, which was disclosed in an annual report on North Korea's nuclear activities, could allow the isolated communist-run nation to expand its nuclear arsenal. The reactor has been shut down from December 2018 to July 2021. Since early July, there have been indications, including the discharge of cooling water, consistent with the operation of the reactor. That's according to the International Atomic Energy Agency. North Korea also appeared to be separating plutonium from spent fuel rods at a nearby laboratory. The IAEA, whose inspectors were booted out of North Korea in 2009, said the developments violated UN Security Council's resolutions and were deeply troubling. Yeah, that's very deeply troubling. And Tropical Storm Nora brushes Mexico's Pacific coast. And much-loved Lou Grant from The Mary Tyler Moore Show, also known by his mother as Ed Asner, has passed at age 91. Ed, we will miss you. And then in tech news today, Amazon will soon let you buy stuff now and pay for it later. We talked about this last week. Through a partnership with Buy Now, Pay Later platform Affirm, Amazon will let customers split the cost of purchases of $50 or more into smaller monthly installments. PayPal's been doing that for a long time. The T-Mobile hacker came forward, calling the company's security awful and frustrating customers. Customers whose information was breached are frustrated by the apparent ease of the attack, as well as T-Mobile's response. Google is pulling the plug on its health app, DeepMind. It's shutting down a number of its health divisions or applications. One of the world's richest men created an apocalypse-ready SUV. Let me see if I can get a picture of it. Where's the paywall going to block me? Ah, it's going to let me through today. Let's take a look. So if you're worried about the apocalypse, you need one of these. That's it, right there. It's an off-road SUV created by one of the world's richest men. It's meant to be an analog vehicle, unlike many modern off-roaders with lots of electronic assists. The Ineos Grenadier is a car that exists because a billionaire and his friends, lamenting the death of the original Land Rover Defender, wanted something rough and ready to go exploring in. Recently, Business Insider got to see just what that means by riding shotgun in the SUV, and it was a revealing insight into what can be done by a new firm with a clear goal and a ton of cash. The idea for the Grenadier was conceived in a London pub of the same name. If we only knew how many great ideas and great companies were conceived in a pub somewhere, or a bar as we call them in America, how many initial business plans were crafted on the back of a cocktail napkin? More than we know, probably. Monaco-based Sir James Ratcliffe, and one of the UK's richest people, saw a gap in the market for people like him, those who prefer their adventure toys analog, despite their virtually unlimited budget, and set out building an off-roader to suit. Revealed in 2020 and available with a gas engine or diesel BMW motor, it's not like other SUVs. Competitors like the Land Rover Defender, the Jeep Wrangler, the Ford Bronco use complicated electronics to get the job done, while the Grenadier relies first and foremost on mechanical input from drivers using electrics only as a safety net for the inexperienced. It will likely be competitive when it comes to price. Its contemporaries have the distinct advantage of being on sale now, while the Ineos is expected to hit North American shores in 2023. Insider wrote shotgun in the prototype, and the prototype certainly wasn't meant to be a showroom darling. Built on June 1st to see how it would fare over about 2,500 miles in all types of weather. The inside of the SUV featured blanked out buttons, screens, placeholder trim, a center console stripped bare, and utilitarian controls that even the most hardcore customer would turn their nose up. It was built to be tested to extremes, not to look shiny in the parking lot. It was refreshingly inornate. Setting off in a billionaire's ideal apocalypse mobile, the first thing you notice is how quiet it is. Usually with pre-production vehicles you get squeaks and rattles and all manners of stuff, but here that's not the case. One squeak from a fire extinguisher was noticeable, but other than that it was solidly bolted together. It's got an 8-speed automatic transmission. Each gear shift, albeit at a steady pace, happened with barely perceptible ease. Easing into rougher, more forest terrain, it seems sure-footed. The ride, I'm looking for the thing here that makes it really different. It's early in development. I'm guessing the biggest thing is the step away from it being filled with all kinds of electronics, because if we get a one of those magnetic pulses, an electromagnetic pulse, an EMP, it's probably going to shut this thing down too. It shuns the trust of computerized ones and zeros for traditional suspension and controls. It's a purpose-built tool for specialists rather than a Swiss Army knife designed to do all jobs for all people. Okay. Well, in other news, the U.S., the Blue Origin lawsuit against the U.S. government is being delayed for a week. Apple and Google's contact tracing apps have struggled to live up to their promises. The tech titans' rare partnership fizzled because people in the U.S. don't want to use these contact tracing apps. It's the ultimate invasion of privacy, and the American people around the world have spoken and said, no thank you. And that's it. That wraps up our headlines for today. If you've got something on your news feed that you find of interest that you want to share, put it in the chat box, and we'll do exactly that. So far this week in Logic 247, our around-the-clock, 24/7 Emini alert service. This is week 161. We've issued a total of 19 alerts, 2 never triggered, still waiting on 8. That's given us 9 actionable alerts so far, of which 2, or 22%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. On this particular trade here at 35.08, the drawdown, or 45.08, the biggest drawdown, move that out of the way for a minute, was 45.06 and a quarter. This trade, you could have taken it with 2-point stop. No, let's see. Yeah, 45.06 and a quarter. Make that 1 3/4 points. Now, that's not always the case. In the live training room, Michael uses, and Valerie, they use a range chart, a 4-tick range chart, and they use an 8-tick hard stop on every trade, every market. With the alerts, everything under the hood is the same. All the principles, the strategy itself, it's identical. When you go from what you see in the live training room to the alerts, the only thing that differs is the time frame involved, the maximum risk, and the potential target size. Okay. Now, as you can see today, we have a new all-time historic intraday high. These alerts show you windows of opportunity in the market where there's fertile trading soil. When price arrives at the window of opportunity, as it did on that trade I just showed you up on the screen, that's when you break out everything you've learned in the live training room. The stuff that Michael and Valerie teach you day after day after day. All of our traders have live instruction 2 hours a day, every trading day. Interactive means you get to ask questions. Why did you say that? Why did you do that? What does that mean? Can you help me? Yes. So again, the alerts, whether it's the logic alert or the concierge alert, it's showing you a window of opportunity. And as you patiently wait for price to get to the window and trigger, that's when everything you've learned in the live training room, those are your rules of engagement. Now you know how to enter the trade, how to manage the trade, and how to exit the trade. And the more times you repeat that process, get the alert, look at the chart, and trade the alert using everything you've learned in the room, the more times you repeat that, the less you'll need us to tell you where to get in or where to get out. That should be your ultimate goal, because that's our ultimate goal. Our ultimate goal is to get you to a place where you no longer need us. Now, when you become a passport holder, that's lifetime membership. You pay once, membership is for life. So once you no longer need us, we don't want you to go away. We're one big happy family. Trading can be a very lonely business. We want you to stick around. We just want to get you to the point where you don't need Michael to call out an entry, because you see it yourself, plain as day. All right, this is the daily chart. Whatever markets you trade, you should always look at the daily chart at the beginning of your trading session to help you identify major areas of support and resistance. Why? Because that's how price flows. On a 1-minute chart, on a monthly chart, on an S&P chart, on a crude chart. Price flows from support to resistance, back to support, back to resistance, back to support, over and over, again and again. It is a never-ending cycle. On Friday, we put in a new all-time historic intraday and closing high. Here it is Monday, and we've put in another all-time historic intraday high. And unless something bad happens, we'll put in a new all-time historic closing high. This has been an unprecedented year, to say the least. To borrow one of Michael's lines. Now, okay. So, this is the last leg up of this monster rally we've had all year. The last leg up began on August 19th. We've got one red candle. 1, 2, 3, 4, 5, 6, 7, 8. Out of 8 trading days, we've had one red candle. That was a retracement that pulled back into the step line and blew on climbing. Now, we've overcome the 62% fib extension. Our next area for resistance above the high of today is the 100% fib extension. Right here is the 24% fib retracement. Here's the 38, here's the 50, here's the 62. Now you see two indicators on my chart. The green line's called the BBC, just stands for bull bear cross. When price is above the green line in all markets and all time frames, we're bullish and we anticipate higher prices. When price is below that green line, we're bearish. We anticipate lower prices in all markets and all time frames. This year, we've probably spent 90% of the time above the BBC. That in and of itself is extremely unusual. Now, price always reverts to the mean. In every market, every strategy, every methodology, price always reverts to the mean. That's just how markets work. Well, in our case, the mean just happens to be green, and price always reverts to the mean or the green. Okay? You can see it here, you can see it here, and here, and here. And yes, we have a pullback coming at some point that will once again bring us back to the BBC. The way the market sits right now, the first area for major support below the low of today is the step line, which is at 44.97. Below that is the 24% fib retracement at 44.90. Below that is the 38% retracement at 44.63. And then the 50% fib retracement of the last leg up is just below the daily BBC, which currently has a reading of 44.47. There's the 62. There's the beginning of the last leg up. So all of these spots on the way down are places where when price on a daily chart hits a fib retracement, you can almost always expect a significant reaction. The 24 will give us a bounce 9 times out of 10. Because you see institutions, fund managers, they watch daily and weekly charts the way we watch 5-minute charts and range charts and 30-minute charts. So when price hits a fib, expect a bounce, especially on a daily chart. So there's the 24, 38, 50, 62. Now this monster rally that I spoke about, it actually began November 2nd of last year. The low was put in on October 30th. We had a weekend, and then November 2nd, the market took off to the upside. The 24% retracement of the entire move up is right here at roughly 42.26/27, which just so happens to line up with this big swing low right here. The market will eventually find a top not an eternal top, but a top for a time. And we will get a retracement deeper than just the last leg up. We'll actually get a retracement of the entire move up. And this looks like a pretty good place. 42.26/27. Make a note somewhere in your journal that is currently the 24% fib retracement. Now, if we put in a higher high, I'll have to adjust the line just like I did a moment ago, and that's going to bring this line up a little bit. Okay, so when will it happen? We don't know. But what we do know with certainty is eventually it will happen. In the meantime, though, we simply trade whatever is in front of us. Now, I already showed you the logic alerts so far this week. Bumpy start to the week, 19 alerts, 2 never triggered, waiting on 8, 9 actionable alerts, of which 2 or 22% would have been stopped out based on not risking more than $300 per contract per trade, but less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Now, we still have our original alert service, the concierge trade alerts. Those work a little bit differently. Okay, the logic alerts are based on current price action, and they come out around the clock 24/7, starting Sunday night at 6 p.m. Eastern, round the clock until Friday afternoon at 5 p.m. Eastern. The concierge trade alerts are based on historic price action. Logic is current price action. Logic is current. Concierge is historic. There's 2 numbers for each market. Oh, and we have rolled silver forward to the Z contract. Z as in zebra. Okay, so if you want to grab a screenshot of these, you can, because we're going to walk through the charts. Now, the way to handle this static report, which is forward guidance for the entire session, the way to handle it once it's published each evening, shortly after the Globex Open, draw a line in the sand, in this case at 45.13. Draw a line in the sand at 44.90. Once this is posted, if price starts trending up towards 45.13, that's bullish. So our strategy will look for opportunities to buy the market. You'll also use everything you've learned in the live training room to find places to buy the market. If price starts trending down towards 44.90, that's bearish. So our strategy will look for opportunities to sell the market, and you'll use everything you learn in the live training room to yourself find opportunities to sell the market. Trending up is bullish, trending down is bearish. So let's go to the 30-minute chart of the S&P. And as you saw, every one of our traders last night got notified to consider being long at 45.13. Now, you also got this other information as well. The short CTA last night was 44.90, and as we can see, that one never triggered. Okay. So when we hit 45.13, price spiked up just 1 point to 45.14, and then it dipped back below the trigger to 45.10 and a half. So 2.5 point dip below. Now remember, on alerts, the maximum we want to risk is $300 per contract per trade, but less when possible. So at 45.13, buyers came in and they took us all the way up to 45.34 and a half. So 34 minus 13, that's 21 S&P points. At $50 a point, that's $1,000 per contract traded. Now that's from 45.13 to the current swing high. We had in the logic channel, though, this trade where you get long at 45.08, initial target 45.10, second target 45.13, next target 45.20. So by using the logic alerts and the concierge alerts, they're designed to work hand in hand, like a hand in a glove. So entering at 45.08, if you didn't take the multiple trade opportunities, if you just bought 45.08 and stuck with it, by the time you got to the CTA trigger, you already had 5 points. So we had 21 points here, plus these 5, then that would be a total of 26 points. At $50 a point, that's $1,300 per contract traded. Now, once you earn the right to trade 2 contracts, it would be $2,600. And once you earn the right to trade 10 contracts, it would be $13,000. But here's the deal. When you become a passport holder, you do not start trading real money right away. You got to learn the methodology and the strategy first. You got to learn how to read price. You got to learn how to read the chart and the indicators. And so we want you trading in SIM until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, our 2420 blueprint will give you the green light to go live with 1 contract. Now you have a different goal. You're trading real money. Now your goal is to increase your account balance by $2,000. Once you do that, our blueprint will give you the green light to add a second contract. Beautiful thing about the second contract is you're adding it with profit you earned in the market. That first contract, that had to come out of your savings, out of your startup capital. But going forward, after the first contract, whenever the blueprint says it's time to add an additional contract, you only add 1 at a time, and you only add with profit you earned in the market. So the 2420 blueprint, which is designed to take you from 1 to 20 contracts over a period of 24 months, it's going to tell you when it's time to go live, when it's time to add a contract, number 2, number 3, number 4, number 5, number 10. And again, from 45.08, actually even just 45.13 to the current swing high, that's $1,000. But if you've earned the right to trade 10 contracts, it's 10 grand. Now, while it's very tempting to just dive in and start trading 10 contracts, it's the worst possible thing you can do. It almost guarantees that you're going to be one of the 9 out of 10, not the 1 out of 10. 9 out of 10 people make that very mistake. It looks easy. It looks simple. Well, it looks easy, but it's not. It can be simple, and that's what we try to show you. So you got to pace yourself, okay? Now, if you took this trade, whether you entered at 45.08 or at 45.13, if you're still in the trade, you should be waiting for what we call the exit signal. What is the exit signal? Okay, notice on this move up, okay, the step line is on the left side of blue and climbing. Price is to the left of the step line. So price is literally climbing the back of blue and climbing step by step. But right here, things changed. Price started to walk sideways. So what we're waiting for is the step line to cross over from the left side of blue and climbing to the right side of blue and climbing. Once the step line crosses from the left side to the right side, then you're looking for the first red candle that closes below the step line. That is the official exit signal. We do not have an official exit signal as of yet. Okay? Got a $1,000 per contract move from 45.13 to the swing high, but we don't yet have an exit signal. The step line is right at blue and climbing. It hasn't crossed over yet, and we're printing a green candle. So could we possibly be going back to challenge the high of the session? We certainly could be. The next weekly trading zone overhead this week is at 45.42. And then there's still one more weekly zone above that. Now the weekly trading zones are published Monday morning, 6:15 a.m. Eastern, before Wall Street wakes up, so our traders have plenty of time to get the new zones on their chart before Wall Street wakes up. Getting those zones on your chart is a very important thing. Don't throw out last week's zones, because Sunday night, Monday, Tuesday, the previous week's zones still hold a little sway over the market. So keep an eye on those, but get the fresh zones on your chart. So that's what happened with the S&P. We triggered the long CTA at 45.13, and we put in a swing high at 45.34. And if you traded the logic alert, you already had potentially 5 points when you got to the CTA trigger. On the Dow, a little different story. This vertical line separates the sessions. So this is the Sunday, Monday session. This is the Friday. This is the Thursday. This is last week's weekly trading zone. All the zones you see on my chart today are last week's zones. By tomorrow, I'll have the current weekly zones on the charts for the show. The long CTA last night was 35,465. The swing high was 35,464. No, it's not magic. It's just math. And then we come over here. And the high here. What was the high here? 35,462. So we never triggered the long CTA. Price got rejected. Price behaves around the CTA very much the way it behaves around a weekly trading zone. Only 3 things happen at a weekly trading zone. The most common thing is this: consolidation, consolidation, consolidation. Second most likely thing is rejection. That's when the 30-minute candle closes and the only thing left touching the zone, see here, is the wick. So about 70-75% of the time you're going to get consolidation. 20 to 25% of the time you're going to get rejection. The third and least likely thing, but it does happen about 5 to 10% of the time, is the slice. That's when price slices through a zone like it's not even there. Now notice here how price came right down to the zone, got rejected, ran up to the zone, consolidated, and then we had some of that sideways consolidation, went back up, touched the weekly trading zone. Now these zones were issued a week ago today, last Monday morning at 6:15 a.m. Eastern. And so you're seeing how they performed last week, and you're also seeing how they're performing this week. That's why I say even though you get your new zones on the chart Monday morning as soon as they're published. And we've published them since December 14th of 2009. But you see, these zones from last week are still holding sway over the market. I mean, we've tried to break through here 1, 2, 3, 4, 5, 6, 7, 8, 9 times, and we haven't succeeded. So, put the new zones on, but hang on to the old zones up until they no longer hold sway over the market. Okay? We opened above the BBC on the Dow. We ran up to the zone. When we run up to a zone, we expect it to be good resistance until proven otherwise. When the market finds resistance that it can overcome, it turns around and goes to look for support. When price drops to the BBC, we expect that to be good support until proven otherwise. So support sent price up looking for resistance. Resistance sent price back looking for support. Support sent us back looking for resistance, back to support, back to resistance. Right here, this was the wild card. We actually spiked below the BBC. The next candle reversed and took us right back above it, where we continued to consolidate at last week's zone. There's nothing unusual about any of this. This is typical behavior. Everything that we teach is fluid across all markets and all time frames. Everything I say about an S&P daily chart is true of a 30-minute YM chart or a 1-minute crude chart, and everything in between. On the Russell, the long CTA was 2292. The short side was 2245. Now, if you're tuning in for the first time, you might be scratching your head going, wait a minute, are you saying you actually put these alerts out ahead of time and actually show us where the entry is and where the targets are? And you teach us how to put our stop loss based on market structure? That's exactly what I'm saying. That's exactly what we do. With our goal being that we get you to the point where you no longer need us. Okay? You don't want to be dependent on anyone or anything. If you plan to trade for a living, you need to be able to do this without help from anybody or anything. So the Russell was flat all night. We opened right at last week's zone, which was 2279/80. These are 30-minute candles. And we consolidated from the open. I mean, gosh, till about 5:30 this morning. Got a tiny move to the upside. Got a little bit of a move to the downside. We are now currently below the BBC. And so the next high probability move is down here. Now, we don't know what's going to happen next. I know lots of folks try to convince you that they've cracked the code, learned the secret, can predict the future. Unfortunately, some people don't always tell the truth. While we don't know what's going to happen next, and aren't ashamed of that, because it's the truth, we do know what the next high probability move is with great certainty. In fact, over the last 161 weeks, we have issued 8,217 individual alerts. 8,217 individual alerts. And 20% of those, on average, do get stopped out based on not risking more than $300 per contract per trade. So why did we miss the boat on 20% of them? Great question. Because we don't know what's going to happen next. Nobody does. Obviously, we get into long trades because there's more buying pressure than selling pressure. We get into short trades because there's more selling pressure than buying pressure. But that can change when you're in the middle of a trade. I will say this, if you go back and take a look at the 20% that do get stopped out, about 75% of the time, price will come back, trigger a second, a third, a fourth, maybe even a fifth time, and run to the target once, twice, who knows how many times. But we don't take credit for those. If it doesn't do it on the first trigger, we count it as a stop out. Okay? All right. So, window of opportunity on the Russell, 22.58 down to about 22.48. Then you hit the short CTA, which could then take you, let's see, this week we've got a weekly zone at 22.56. So really your window of opportunity is about 22.59 to 22.57. Now once you get below this week's zone at 56.57, the next zone is down at 33/34. So really the better window of opportunity, let's see, that zone I said was 56.57. So there's 56. Okay. And then I said the zone below was 33. There's you a nice window of opportunity. 22, we'll call it 22.53 to 22.33. That's 20 points. If this window fills, if price comes down and fills this window, that's $1,000 per contract traded. Russell pays $50 a point. Okay, on the NQ, the long CTA last night was 15,464. The short side never triggered. Again, these are last week zones on the chart. All of our members got the new zones this morning, 6:15 a.m. Eastern. And so it was on the Wall Street opening candle, 30-minute candle. We triggered the CTA on the long side and went from 464 to the target at 540. And so 540, yeah, 540 minus 464 at 76 points. The NQ pays $20 a point. That's $1,520 per contract traded. Now it went beyond that, so there was more profit available, but this is the published entry and this was the published target. So from the published entry to the published target, every one of our traders had an opportunity to trade this, whether it was with one contract or more. One contract, $1,500 with very little risk. Moving on to crude. All right. The long trigger, 69.70, never triggered. Game closed. The short trigger did trigger, but just barely. From 67.95, the first trigger took us down to 67.81. So that's $140 per contract traded. Price got back above the trigger, triggered again. This time we put in a swing low at 67.67. Well, let's just call it, for the sake of math, $67.70. That's $250 per contract traded. This is where we opened last night. We had a gap. Actually, yeah, this was the opening candle. This is where we closed Friday, so we had a huge gap higher open, turned into a doji. Price rolled over, gap below the BBC, came down to the short CTA. Buyers came in. Look at that big doji. Took us back above the BBC. A leg and a retracement and a leg. Okay. Remember, the pullback holds more often than it doesn't. It held here and here and here and here and here and here. Then it held here. And then it held here. Moving on to gold. The long side never triggered and the short side never triggered, and we're currently consolidating at the weekly zone from last week, 1813/1814. Window of opportunity right now let's call it 1809 down to 1807. Yeah, 1810 to 1808. I like that better. 1810 to 1808. That's $200 per contract traded. Currently priced just consolidating at the weekly zone. Remember, that's the most likely thing to happen. We've rolled silver to the Z contract. Now, I did do the zones based on the previous contract, and because it's so early in the week, I will reissue the silver weekly zones later today. But based on what happened last night, a 2 penny move is $100. The CTA long side was 24.24, and we ran up to 24.28, so 4 pennies, a couple $100. Swing high here was 24.25, and so that just basically became a stop out. And there you have it. All the markets recover. Brings us right back to the daily chart, where buyers are still in control, still trying to drive price through the high of the day. Once we take out the high of the day, the next obstacle overhead is the 100% fib extension. Now, let me just do this before we go. Hang on. There we go. What was the low of this candle? 44.65. What was the low of this candle? Oh, come on, give me a break. Can't see the wick back there. $44.65. So 44.65 is right there. All right. So I take this tool and I go from here to here, and we're gonna start over. Go from here. What did I just delete? The wrong thing. There, this will give us a better picture. Okay. Okay, so from that low to that high to the retracement low, that gives us some sort of an update on those fib extensions, okay? So we hit the 50, here's the 62, and here's the 100. Because of this swing high being a little bit higher than the previous swing high that we used, okay? So I'm going to take this out. There we go. It's a little more accurate. Now, the thing I have to put back in, and I know why I took those out, because it made the chart so crowded. So let's do this. 62% fib extension. %. Fib extension. Okay. Now I did that so that I could do this and get rid of those, because what I want to do is I want to put the fib retracements back on. The last leg up from the low of the 19th to the new all-time historic high put in today. How's that? Nope, not quite. What's this low? This low's 47.75. $47.75. Bingo. So from this low to the new high put in today, the 24% fib retracement of the last leg up is 44.90. And as I show you again and again every time it happens, when price pulls back to this 24% fib, because the deep pockets are watching daily charts, we're going to see a reaction. Just like last week and the week before, when we hit the 24, when we hit the 38, when we hit the 50, man, we had a huge reaction. Is it because fibs work, or do they just become a self-fulfilling prophecy because people think they work? Well, bottom line is they work, so why fret your pretty head over it? Okay? And by the way, I think they're, fibs are a real thing. You don't have to spend money on $20,000 fib software. You've got all the free tools you need right here. But just do a little research on what the golden ratio is, how it was discovered, how it's in our DNA, in a flower, in a pretty woman's face. Okay? It's about symmetry. But again, you don't have to spend 20 grand on specialized software, because everything that software does, you can do yourself with the free tools you have with virtually every trading platform. Okie doke. With that, let's go to our good word for the day. If you haven't got your passport yet, here's where you get it. EMiniFuturesTrading.com. It's self-service. You just go there, you click it, you get your passport, Valerie gets notified, and then she sends you all the information you need to get going. She'll get you out all the Telegram links, she'll get you set up with your indicators, your 24/20 blueprint, and then you'll be in the live training room with us tomorrow morning. You'll be in the alert channel with us tonight. Remember, the alert channel stays open around the clock 24/7. We provide client support 24/7. You never have to trade alone again, and trading can be a very lonely business. Passport is a lifetime membership to everything we do, everything we've ever done, anything we might do in the future. How much? Must be a lot. Not really. $5,000. To be exact, $49.97. Well, that seems fair, but what if you guys just vanish tomorrow? Why would we? It's a good business, right? And we've been doing this since 2005. So, Michael and I have an agreement. We never ride on the same city bus or fly on the same airplane. So if something happens to one of us, you still got the other one. All right? Okay. Enough funny stuff. A good word for the day last week was being willing to change. Was it? I believe that we were talking about investing in your children last week. Yeah, let's go to Deuteronomy 32:29. If only they were wise and would understand this and discern what their end will be. And most of us don't like change. Some people say, oh, he's stuck in a rut. And you say, no, I'm in the groove. Unless you're willing to change, in a few years from now, you'll be exactly the same as you are today. Except you'll be older with less time and fewer options. The Bible says, if only they were wise and would understand this and discern what their end will be. How do you become willing to change? Recognize that change will happen whether you like it or not. If you do that, you'll be prepared. John Maxwell writes, the only thing certain about tomorrow is that it will be different from today. If you doubt that, consider this. And we did go over this last week, but by golly, somebody needs to hear it again today, so I'm going to just keep going. The only thing certain about tomorrow is that it will be different from today. If you doubt that, consider this. John's writing, my grandfather had a farm, my parents had a garden, and I've got a can opener. It's a different world than it was 20 years ago. And I can't even imagine how different it will be 20 years from now. But the good news is that the world changes so fast that you couldn't stay wrong all the time if you tried. The difference in who you are today and who you'll be 25 years from now depends largely on three things: the books you read, the relationships you build, and the time you spend with God. Do you want to be wise? Who doesn't? The Bible says the Lord gives wisdom, from his mouth come knowledge and understanding. It's Proverbs 2:6. Do you want to be happy? Blessed are those who find wisdom, those who gain understanding. Proverbs 3:13. Do you want to feel fulfilled in life? Be steadfast, immovable, always abounding in the work of the Lord, knowing that your labor is not in vain in the Lord. It's 1 Corinthians 15:58. Now that was a repeat of Friday's good word for the day. Today's good word for the day, I'm going to go ahead with that as well. Get a double dose. Mark 5:40. Jesus sent them all out of the house. Sometimes you just got to throw them out. Or take out the garbage, as some might say. When you're trusting God for a miracle, nothing will drag you down faster than unbelief. Plus, it's impossible to know what God is doing based on how things look on the surface. Faith is confidence in what we hope for and assurance about what we do not see. That's Hebrews 11:1. So in order to stay strong, it's important to fill your mind with suitable things, what is true and honorable and right. Philippians 4:8. Jesus did not allow mockery, ridicule, or unbelief around him. He did not tolerate that. Just before he raised Jairus' daughter from the dead, the people were laughing at him. When he heard the little girl had died, Jesus told her father in Mark 5:36, "Do not be afraid, just believe." You can believe, or you can allow fear to undermine your faith. The mockery of others is the fastest way to knock that mustard seed of faith that you've been clutching right out of your hand. So when Jesus went into Jairus' house, he didn't take anyone contaminated by contempt. In Mark 5:37 it says he allowed no one to accompany him except Peter, James, and John. He put everyone else outside. He said, "Get out." Except the little girl's mother and father, and taking her by the hand, he said in Mark 5:41, "Little girl, I say to you, get up." Immediately, the girl got up and began to walk. Friend, when your situation, my situation, our situation, the world's situation looks impossible, don't allow those who mock your faith to knock it over. Shut them out and let God in. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.